Hi, everyone. Thanks for joining today. Our webinar today is on perfecting your touchless invoicing. My name is Vishal Patel from Tradeshift, and I wanted to introduce a special guest that's going to join us today. But before I do that, I just wanted to give you a couple of housekeeping items. We want to get questions from you, so please do enter them into the chat box on the right. If we don't get to them on this webinar, we'll get to them afterwards. Someone will follow up with you. And also, the slides and the recording will be sent out after this webinar today. So not to worry, you'll get all the slides afterwards. But again, so thank you for joining. And we have a really exciting topic here today. I know a lot of you have probably dealt with or have already implemented or have tried to implement straight-through processing, which is also called touchless processing. And we have an expert here with us today, David Hay. He is a senior process consultant and a member of the advisory board for the Financial Operations Network. David brings over 40 years of experience in international banking, finance, outsourcing. He has previous roles as the Director of Shared Business Services for HP, Global Marketing Manager at Global e-exchange services. David is really one of the leading specialists in process excellence, particularly the source-to-pay process. And so, David, thank you very much for joining us today. And myself, as I mentioned, I'm in marketing. My name is Vishal Patel, and have also been on the industry analyst side, researching best practices in this technology space. Okay, so in order to get started, I just wanted to go through a brief agenda for what we have planned today. David will take you through some market research around straight-through processing and sort of the benefits and even some of the challenges that companies face and the reason they want to do touchless processing. The process change that's required, because it is essentially a process change. It's also taking responsibilities out of your AP staff members. So we'll talk a little bit about that. The role of automation as well. And then I'll talk a little bit about Tradeshift, who we are as a company and our technology. And then at the end we're launching a business case calculator. I was actually just launched this week and wanted to walk you through it very quickly and just show you what kind of value you can get out of it. And then ending with question and answer. So with that, just wanted to hand it over to David.
Good morning, or welcome to the webinar. I'm going to start off with a little bit of research. The CFO is probably the one that in most businesses you have to reach in trying to introduce any kind of change or new processes into the business. And the best way to do that is to meet his needs or her needs at the same time as you're meeting your own. So looking at CFO Magazine's eight top issues in 2014, 6 of them actually fall in to AP operations. The number 1 is a transformation agent, which is consolidating into the shared service center. This is something talked about a great deal in AP and is absolutely a best practice. His concerns also is to keep up with increasingly complex compliance requirements for SOX, OFAC, Affordable Care Act, etc. A plan for better business performance analytics. Invest in the digital revolution. And they see a key source of competitive advantage as some of the newer technologies, such as the cloud and mobile computing. To make sure that innovation is a priority and at the same time address the mounting pressure on the financial capabilities of the company. Looking at it from another angle, this is from the Aberdeen Group, the top priorities for financial executives: improve visibility into the cash flow and cash management. At the same time, lowering invoice processing costs and gain visibility into the performance, more analytics, and lower cost at the back end, the settlement and payment process. So the number one challenge facing AP in procurement is managing paper documents. When we do the studies and we look at paper, we see that invoice delivery methods, payment is number one, and PDF is number two, although recent trends show PDF now gaining over paper. But regardless, for most businesses, both of these end up being paper. So what are the problems with paper, the challenges? One cannot reconcile in a timely manner. Often invoices are sent to requesters. They can spend anything from 5 to, in one case, 60 days before they hit AP. No reconciliation can be done. Unable to handle exceptions in a timely manner. Simply the volume of paper coming through means in many cases exceptions can't be handled. One company couldn't get to them for 30 days. One has data entry errors. All of these lead to delays, which means you cannot capture discounts, which is often a goal with companies. Inability to meet supplier requests to shorten payment times, and difficulty finding or managing paper. So, what are the initial steps to consider when trying to get to straight-through processing? Well, right off the bat, the first in the AP list on the CFOs' 8 needs was shared service center. So, if you have a consolidated AP center or a shared service center, you will get the best results. Also have all invoices sent directly to AP. Also, don't look at it just from the AP standpoint. Look at the whole process, from PO delivery to payment and remittance advice delivery. One thing that we found talking to suppliers is if they're asked to use e-invoicing, they prefer or expect e-purchase orders. So let's start with process. Let's first look at reducing the errors. Find out what the sources are. Poor processes. As I mentioned, invoices sent to AP. AP and sourcing not collaborating. This can be one of the biggest drawbacks, although it is one that is becoming less as time goes on. No PO or PO changes not communicated to AP. Lack of support for AP's efforts. Critical master file not maintained. Master file should be maintained by AP, not sourcing, although sourcing is a place where changes may come from. The studies show that 3 to 7% of vendors change their name or merge within a year. Over half of vendors are one-time vendors with no activity in a year. No standards for entering information, such as proper naming conventions or postal conventions, and quite often multiple entries for the same company, either in different names such as Hewlett-Packard and Compaq, or IBM or International Business Machines. So standards need to be in place. So look for ways to improve the process. Look for processes to be automated, steps to be eliminated, steps to be changed, and focus staff on value-added processes, and give visibility to both internal and external customers, vendors, across the entire process. Processes to be automated. Everything from RFQ, PO, change, etc. Invoice receipt. Workflow, the heart of the system. payments and remittance advice delivery, and customer service. One of the things that I hear time and time from AP departments is they're not using portals or better methods of customer service. It is often the last. And in fact, I spent 4 days last week at a risk IRS/compliance/AP conference. And when I asked the question about portals, only one person in the audience raised their hand, yet this can be critical. Steps to be eliminated. Approvals on PO or catalog-backed invoices that are from trusted suppliers or fall before a preset value. In many companies, things like utility bills, etc., still have to be approved, yet they're always for the same amount. So eliminate approvals and switch to audit. More and more companies are now charging late payment penalties. The average seems to be 18%. So you want to as much eliminate undue processes for these invoices and ones that are eligible for discounts. By the way, I did 3 presentations last week, and I asked the audience at each one how many times an invoice was come back not approved, and not one person raised the hand. So move from approval to audit where you legally can do so. Move to negative or assumed approval. This is something we used to do at Hewlett-Packard. Even our travel and entertainment, our expense reports were no longer approved. We found that AP managers, the functional managers, would approve any document put in front of them. So we moved to no approval, we fast-tracked them through, then we did a strict audit in the back. And in fact, the audit, threat of audit, reduced our actual overall expenses from the previous method. Use POs for all transactions. At GE, we had an LPO, a limited PO, up to $1,500. This allowed the administrators to literally create a PO in the system. It didn't need to be sent out, but it gave a document there that automatic matching could take place against. I act as the finance person for my son's small business, and we issue POs for all our purchases, leave them in the system, so when the stuff comes in, our point-of-sale system automatically matches it. So, and automatically checks the pricing against the supplier's catalogs. So it leads to a very smooth and easy process. Okay. Focus staff on value-added processes. This is the best way to prepare an ROI for your management. Spend analysis. Aberdeen Group estimated that U.S. businesses leave over $260 billion on the table by not taking advantage of discounts and contract negotiation. Companies are often buying the same product from the same vendors at different prices, depending upon which business unit or person asked for the goods. So rationalize and standardize in contracts. Only allow certain purchases. Pens, there's lots of things that you can standardize. It gives you a bigger volume discount and controls pricing. So track and report off-contract spend. Reduce maverick spend outside the contract. In fact, one of the major manufacturing divisions of GE in the MRO, we thought we had $300 million of spend on the contract. We thought maybe we had 10-15% off-contract spend. Turned out the off-contract spend was twice as big as the contract spend, costing us over $60 million in potential profit. Okay. Early payment discount capture. This is a big target for many companies. Interest rates are very low, yet the return on 210 net 30 is over 35%. One major corporation, their target was $200 million in additional discount. Now, if you are in an interim method or you can't make 10, start offering terms such as 1.5 for 15 days, and then extend your normal payment terms out to 45 or 60 days where you can. This, by the way, is the model showing the 36-day return. Improve visibility across P2P. Now, this is critical for automation. Data is then visible from the minute it is entered, whether it comes in electronically or through OCR or paper. Accruals can be accurately made, and invoices can be tracked by AP, purchasing, and vendors from entry through to payment. The big benefit of that is finance can accurately forecast cash requirements. If you are allowing vendors entry, you're getting much better customer service. At this conference, my friend who used to be VP of AP and purchasing at AT&T told the story of having one of his staff phone his AP department at 4 o'clock on a Friday to track down an invoice, only be told, hey, it's 4 o'clock on Friday, please call back Monday. If you have a portal, there is never any 4 o'clocks on Friday available 100% of the time. Management can track progress against goals. Another critical thing that the CFO wanted, they can track progress. Okay, the role of automation. This is another Aberdeen Group recent study, what it costs and the savings between manual and automated. And the interesting thing on this chart is the two bottom transactions, the two that AP are the most responsible for, actually return the greatest percentage savings to the companies. So again, elements of automation. We've been through this, EPO delivery, workflow engine for automated approvals or for handling the emails, etc. for approval, scanner and OCR. If you're using OCR, it can be hooked to both the paper entries or the PDF entries, then e-invoicing, of course, and your network for document delivery and customer service. So let's look at the complete process, straight-through processing. Who's doing it? Well, only the most efficient companies, only the upper quartile are actually achieving straight-through. All the others are getting nowhere. And why is that? Well, when you look at the automation technologies in place today, you'll find that P-card and expense reporting are right at the top, and automated workflow. So 58% of the companies have automated workflow, 53 front-end imaging. So there is a lot of potential here. Interestingly enough, the lowest is down in the web-based transactions and portals. So invest in the digital revolution. That's in the 8 top issues. A key source of competitive advantage. Cloud-based solutions allow companies to be more flexible, scale as business changes, allow business to adapt, and meet the needs of an increasingly global workforce. Cloud technology, this is from another study, 57% of CFOs say they would consider migrating some IT systems to a cloud environment. The reasons, the overall cost of IT infrastructure, competitive advantage, and the inflexibility of current infrastructure. The critical thing with the competitive advantage is it allows these companies in the lower quartiles to compete with those in the top quartile. Okay. So, as a summary, it's a P2P collaboration between purchasing and AP is critical to success. Move electronic. Get as 100% gives by far the best return. Look for ways to eliminate bottlenecks in the receipt and approval process by using things such as assumed approval, etc. Use straight-through processing to streamline the matching process. If you have a PO and a invoice that match, approve it automatically and then automate. Establish metrics and monitor for continuous improvement. Okay, when one looks at the top quartile, what are the benefits that they're getting? Well, they have a procurement advantage through better cost analysis and contract management. I often get back, well, big companies can do that, Dave, how about little ones? I did this in my son's small business, a very small business, and found that I could reduce my costs by up to 10%, which allowed me to be very much more competitive against the web and very competitive in government bidding, where the margins are often only 20 or 30%. They have a cash management advantage through better forecasting and working capital management. They get a discount and rebate advantage plus penalty avoidance. And they have compliance with SOX and the other government regulations, and of course, a cost advantage. Okay, I would like now to turn this over to Vishal.
Okay, great. Thank you, David. That was a lot of information around straight-through processing, and hopefully our audience found it valuable. The next section is really going to be quickly touching on Tradeshift and who we are, and then going through some of the business case calculator that's very new. So just to provide you a brief overview of Tradeshift, we are a business-to-business platform that helps companies of all sizes transact, connect, and collaborate with each other. Most of our clients are large global enterprises, and we help them work more easily and productively with their supply chain, no matter where they are in the world. I'll show a brief slide showing some of the types of customers we work with, but I think an important distinction here is that we also ensure that there's a lot of value created for suppliers, because for business-to-business networks and platforms like ours to work, supplier participation is really one of the keys. And for electronic invoicing, supplier participation is actually the main hurdle, and we've made it easier for suppliers. So free electronic invoicing, faster payments for them, predictable cash flow, and various other value adds from a supplier perspective. As you can see, just following David's message, Tradeshift is fully embraced the cloud. So all of our solutions are cloud-based. All of our solutions are also fully mobile, so we'll offer a full mobile experience from creating invoices to approvals to coding and so on. So everything that is available on the solution on a PC is available on a tablet and is available on a mobile phone as well. As you can see from some of these images, our Tradeshift's approach to creating solutions is very much to take a simple and intuitive interface, so that there's little or minimum training required. But we've found at our clients that we've been able to roll out workflow solutions with zero or no training. So that's really something that we're very consciously trying to do. Just to explain a little bit about the platform. So as I mentioned, Tradeshift connects buyers and suppliers to enable them to transact, to communicate, to collaborate on various things. So the platform is really, if you can think about it as an app platform, and Tradeshift has built certain core apps like electronic invoicing and cloud scan, and our business firewall, which is our rules engine and collaborative workflow. But we can also have third parties come and build apps on top of the platform as well, and this could be, any different areas of business or business processes that can be automated. Other value add like supplier registration or currency exchange, or the sort of applications that can be built on top of Tradeshift are really endless, and many of our customers themselves build their own apps as well. So once they've started using Tradeshift, they've realized that the platform can allow them to automate other processes. And one of the examples there is a supplier registration app. But just to provide you an idea of Tradeshift's approach, we really take a balanced approach to this buyer and supplier relationship and the capabilities we provide them. A lot of business-to-business networks have traditionally focused mostly on the buyer and assuming that the buyer takes on the responsibility for onboarding the suppliers and just focused on creating buyer capabilities. With Tradeshift, we really started by creating value for the supplier. So we were one of the first networks to provide free e-invoicing for suppliers, so no supplier fees, which is often a hurdle for suppliers. We connect to suppliers, to their accounting systems. We can offer integration to their ERP systems as well. There's much easier communication and collaboration for suppliers directly with their customers. For example, they can have one login to the Tradeshift platform that will allow them to work with all of their customers on Tradeshift, as opposed to having different accounts as it is with other solutions. And then, of course, on the buyer side, we are helping them reduce costs and automate and help them digitize their entire supply chain and various business processes within there. We really do believe that our platform and the social network features and the communication capabilities we've built in there really just make it very easy for communication back and forth, for processes to be automated, and one of the key ones, of course, is touchless processing. So we do offer three-way match to matching POs to invoices and contracts and goods receipt notes, and so there's very full, robust capabilities around that. But I think it's good to give you a sense that we do have a balanced approach to both buyer and supplier. Just an idea of some of the companies we work with. So the top there are some of our larger clients that we work with. So obviously large global companies, DHL, ADM, CBRE, the NHS in the UK, all of which come with extremely large supply chains who we are in the process of onboarding every day. So at the bottom there shows some of the large suppliers that are on the Tradeshift network. Now, of course, there are many others, hundreds of thousands of other suppliers that are on the network as well, small, medium, and large. But one of the things that you can see here is that our platform and our footprint is really global. So we work with, for example, DHL in Europe and in the US and have a global e-invoicing capability for them. So our Tradeshift is really global in nature. So just to give you an idea of the types of metrics and data that we collect in terms of reporting and dashboards that are available on the Tradeshift platform, this shows you a view of some KPIs that customers have wanted. On the top right there, you can see touchless processing as a metric that can be measured, and these charts are fully clickable and can be drilled down into. So I have a couple of examples here, and the metrics here can be configured depending on customer needs. So you can see here, this is some data around PO mismatch, the coding that's required, top 5 suppliers that are sending documents over. Just one more example here that shows you that the top 5 suppliers with documents that are in the workflow, and if you click, for example, on 74, it will show you what types of documents and what the challenge is with those specific documents. So some pretty good and easy to use functionality in terms of reporting, which I think is an important piece of AP. But just before we go to the next slide, the next section is really focused on business case calculator. Just wanted to give you a brief overview of that. We worked with a market research firm called Paystream Advisors, who many of you might know. They helped us developed this business case calculator. So the underlying data that's calculating the savings from this tool is based on research that Paystream advisors put together. So what I'm going to show you here is sort of one of the final results that you can see once you go through this 5 to 6 minute calculator. And after entering maybe about 5 to 10 pieces of information, you can get a full savings calculation for your specific organization. So it shows you the total annual savings that you might be able to achieve by automating. It shows you on a per invoice level what the cost savings is, what the labor time savings is, and then also what your potential for early payment discount capture is. But then also it gives you a lot more detailed information on this table here. So for your total cost, it breaks it down into the various activities that an AP organization would go through. For example, processing mail and entering data might cost a certain amount currently, but with automation, that cost will go away. So it takes into account some various activities, gets into some good detail. But ultimately, what we are doing on the tool is allowing you to gauge where you fall on this Paystream P2P maturity stage. So they've put together this maturity stage document, which shows the different stages in which a P2P process and AP organization is in their sophistication and maturity, really. So stage 1 is where, for example, it's mostly paper-based and there's some centralization, but not all. Touchless processing, for example, is below 15%, and it takes over 20 days to process an invoice. But then as you go to stage 2 and 3 and 4, all of these metrics really improve quite a lot. And at stage 4, you're in a really highly automated environment. And touchless processing is at 75%. So you can see the improvement that's been made up until stage 4, where a significant majority of invoices are being processed in a touchless manner. And this is something that David talked about it before, where he's seen that done at various customers that he was present at. But that really then reflects on the cost of your organization, the efficiency, the data visibility, and many other aspects. But that's all for our presentation. I would encourage you to go to this tool. You can find it through our website. It takes about 5 minutes to calculate your savings. And we will go into questions now. So if you have any questions, then please do type them into the chat box, and I will be happy to answer them, or if they're specifically to David, I'm sure David would be happy to answer as well. So just let me know if there are any questions. Okay, so it looks like there are a couple of questions coming in, and I think the first one is for you, David. So what is considered best in class for when it comes to touchless processing? What is considered a best in class performance metric?
The one that the best companies always show is that they're able to process an invoice in 1 to 3 days after receipt at a very low cost. For an example, at GE, we used to bill back the businesses from AP, and if they had a PO, receipt of some kind, an invoice, and we paid electronically, the chargeback was $1.50. Regularly, I see that these companies are achieving costs of below $2 to process a set straight through.
And is there a specific percentage that's considered top performance when it comes to, for example, the percentage of invoices that are processed in a touchless way?
Only about 16% of companies are achieving this. The problem is you have to automate end-to-end to really achieve it. If you only automate part of the process, you're always going to be a little behind.
Okay. And the next question is for you also. What steps, and I know you went through this a little bit, but what steps do you recommend to be completed in order to set up an AP organization for straight-through processing?
Well, first step, of course, is to get upper management approval for the changes that may be necessary. Work with purchasing. Really work closely with them, and then look at the automation. Working with sourcing, use a system. It could be Ariba, it could be any purchasing system to issue the POs. Have the workflow in place for approvals. Look at OCR or scanning to get the paper and the PDF automatically into the system. Look for an e-invoicing process and look for back-end payment processes. And when you're considering this, look at what's available in the market as software as a service, the cloud, etc., because that will give you the highest or the fastest ramp and be able to get you up and running much quicker.
Okay, great, thank you. And the following question is, what is the most important process change to plan for? So obviously, straight-through processing requires, some level of change management for AP organizations. But what is in your mind some of the top things to be mindful of in terms of process changes?
I think making sure that you have PO delivery, but then look at your whole. Look at your goals. What are the goals? If the goals are, for instance, as we started at GE, discount capture, then change the process from approving every invoice to those invoices that are from trusted suppliers, etc., move to a more negative approval. The way we did it at Hewlett-Packard was I'd receive an invoice. I'd receive an email saying, we have received this invoice for these goods or against this purchase order. If we do not hear from you in 3 days or 4 days, we will automatically approve this invoice and then do back-end audits. And that allows the process to flow through. That is negative approval. Now, there are some companies that are government-funded or non-profits that cannot do that. In their case, I say, put an escalation in. Say, if we have not heard from you in 3 days, we're going to escalate this to the next level and the next level until we receive approval. So I would change these processes. Of course, all of this is based on making sure that AP receive all the invoices, don't have them sent to anyone else.
Right. Okay. I think there's a couple of more questions still, and one is around the technology. So you showed a slide showing the usage of various types of technology, OCR, e-invoicing, data capture, and so on.
Yeah.
If you're looking at straight-through processing, is there one technology that you can't really do without?
All of them. Payments is probably the one that could be the last added. But if you're looking at straight-through, you've got to automate everything from the matching in whatever workflow you're using to invoices in, matching to do it automatically. You need the purchase order in there or a catalog to match against. So I don't think there's any critical piece. I think it's you've got a number of critical pieces. If you're still receiving paper from some customers, that's fine, but you can get straight through processing and everything you can bring in electronically. So no one piece. It's the combination of them that makes it successful.
Okay. Good to know. I think that's all the questions we have for now, but David, thank you very much. This is very, very helpful and educational. Hopefully our audience enjoyed this, and if to our audience, if there are other questions, then feel free to email myself. My email is on the slide, or David. And if we didn't get to any of the questions, we'll get to them after this session and send you an email with some answers or thoughts. But thank you again, and as a reminder, all the slides and the recording will be sent out afterwards. So keep that in mind. Thank you.
Thank you.